Hello, good evening, everyone. All right, you're welcome to today's class. This is the introductory part of our course, Forex Trading Beginner Course. All right, so it is titled FXT101, Introduction to Forex Trading. All right, so before I go ahead, let me introduce myself. My name is Yisra'el Ajimotokin. I'm a Forex trader. I'm a graphic designer, professional graphic designer. I am a business owner. All right. So I've been trading Forex since 2019. All right. So I have made some losses and profits, and I think that qualifies me to speak to you on this course. All right. So I do not want us to spend much time before we really go into the course. All right, we have a lot of things to cover, and I'm trying to see how this course will just be 30 minutes. I mean, today's class 30 minutes, or just above 30 minutes, between 30 minutes to 1 hour at most. All right, so we have the following subtopics to cover. The first one is what is Forex trading? Next, why Forex? Next, buy versus sell. Next, currency pairs. Next, pips and lots. All right. So very quickly, let's move to the first subtopic before us tonight. All right. Let me try to adjust my screen so we can see it very clearly. All right. Now, what is Forex trading? Forex, that is foreign exchange, or FX trading, is the process of buying one currency and selling another with the goal of making a profit from the trade. Forex, that is FX, is a representation of the word's foreign exchange. So it means that whenever you see the word Forex, FX, or foreign exchange trading, it means the same thing. That is Forex trading, FX trading, or foreign exchange trading. It means the same thing. The full one is the foreign exchange trading. All right. So, and I think from the just like as the name implies, you should already have like idea of how this market works, right? It means that you are exchanging foreign assets or foreign maybe commodity or something, right? So and then from the first introduction from it, we should have already understand that Forex trading has to do with buying and selling. And then one thing I want you to pick already is that trading Forex, when you buy a currency, you simultaneously sell another currency. All right. So I think before we move ahead, let me just use this illustration. I like using it very well. I think it will give us a better understanding of it. All right. So come closer. Let's talk. All right. Now let's assume that you are working in a company. You're working in a company, and then your manager or your manager want to send you on a course. Let's say going to the US. All right. And then you already know that your Nigerian naira will be useless there. Naira is not a legal tender in the US, so you need some dollars, right? So you now walk up to some of these bureau de change to buy dollars. And let's say there are two of you, like you are two. You and your friend, or maybe you and your colleague at work. You went there together. The both of you will be going for the same, for the same course. So you went there together. Two of you bought $100 each at 75,000 naira. All right. So now you sold your naira to buy dollar, United States dollar. All right. Now, unknowingly to you, you have participated in Forex trading. Understood? You have participated in Forex trading. Now, let's say you come back to the office, and maybe something came up now, then your traveling, was postponed, or maybe due to something, I don't know, anything can happen. Let's just say like anything happened, something just came up, and then your flight was, was delayed or, postponed. And then your manager now called you guys that, okay, because of this, one of you, that your friend now, that your friend has to go to maybe Lagos. Now, let's assume that your place of work is in Abuja. Then, so one of you, that your friend precisely, will be going to Lagos for an assignment, and the assignment will be taking place maybe will be taking him like about 2 months before he finishes. All right, excuse me. So, like 2 months. Then your boss now tell you that, okay, so you will be the only one going now. All right? And then that you will no longer, because the initial plan was that you will be spending 1 week, just 1 week in the US. But now you will be spending 2 weeks. Then you now realize that your $100 will not take you for 2 weeks. So you realize that you need more $100, making $200, right? So you now go back to that same Aboki guy that you want to buy $100 more. Then the same $100 you bought about a week ago, 75,000 naira, the guy is telling you now that it is now 95,000 naira. Wow. So you were like, oh no, I bought it, some days back, 75,000 naira. He's not telling you that, see, okay, the price of dollar in the market is now increased. You're like, okay, you call your friend to speak to him that, okay, my brother, see what is happening, this is what I say. And then now your friend now agreed to sell his own dollar to you, the $100 to you, for let's say 80,000, right? At least. Now, what happened to that your friend is that he made a profit from Forex trading, unknowingly to him anyways. All right, so I'm just trying to explain it. So that is what Forex trading is. And then now when you are buying the $100 from your friend for 80,000 naira, you are giving him another naira. It means that you are selling naira and then you are buying dollar, because when you use naira to buy dollar. All right. So let's go ahead now. According to a 2022 triennial report from the Bank of International Settlements, a global bank of national central banks, the daily global volume for forex trading reached 7.5 trillion in 2022. All right. So it means that the total amount of money being traded daily, right, is $7.5 trillion, not naira, not billion, $7.5 trillion. So now let's move ahead very quickly. So now, why Forex? Why Forex? Now, the Forex market is the largest financial market in the world, with an estimated 7.5 trillion transacted daily. That is 160 times the volume of the New York Stock Exchange. Source, now that is like the source of this. Now, to get a sense of just how large this market is, consider that the amount traded in 4 days could pay off the entire United States debt. All right. So now the Forex trading, so why Forex now? And that is what makes Forex trading very, very, like volatile or like profitable. Like if you know what you are doing, you can make a lot of profit. A lot of profit. You understand? Now, daily 7.5 trillion, $trillion is being transacted daily. All right? Now, so when I was telling you that you can make $5 between $5 to 10 or $5 to $100 daily profit, some people will be feeling like, why is it possible or something? Now, if you made like $5 out, just $5, right, out of this amount, so do you think you really make something? No, you don't. Well, you did actually, but I will consider it as why you don't. You understand? So it is a very, very large market. You understand? So there's a very, very good potential there. there's a very, very good reason. Like there are people that they are forex traders, like full-time forex trader. They are billionaires. All right. Like the person that taught me forex trading. Now, sorry, I supposed to tell you something from the beginning of this course. Yes, I already mentioned that I'm a believer, and then sometimes I might, make reference to some scriptural portions in the Bible. All right, so I'm sorry if you are offended for that, but please just bear with me. That's how I know to do my things. All right. So now, if you've listened to like Koinonia message for about maybe between 2011 to 2017, you always hear this guy, Ejimi. Yes, like he's a forex trader, like a full-time, a professional forex trader. This guy like travels to Dubai to learn forex, travel to this for for forex trading meeting and all of that, to China, to Japan, and all every other places. So I learned forex trading from him. Actually, I learned forex trading from him. So I'm just telling you now. Him himself is like a billionaire, and he's just below 40 years. He's a billionaire trading forex. And he started from like nothing. From like nothing. According to him, okay, let me just not go into that anyways. But I'm just telling us that forex market, being the largest financial market, like has a lot of potentials and is very, very profitable. And at the same time, you can lose a lot of money there if you don't know what you are doing. All right. You can lose a lot of money there. I don't know, maybe you might have heard of people that have lost thousands of dollars, millions of nairas and all of that in the forex trading. But to the glory of God, I have not, lost like much. I've not lost up to that. All right. So now let's go ahead. All right. So not only does Forex offer the benefit of being the largest market in the world, through trading currencies, it is naturally also the most liquid market available. All right. Forex is a seamless, decentralized 24 hours market that follows global banking activities from one international market to another. Unlike in other markets, Forex traders can trade 24 hours a day from Sunday through Friday. Yes, like the Forex trading activities take place in popularly known 6 sections in the world globally. All right. So, and that makes it possible for you that even when a session is closed, when a session is closed in a particular country, another one is open in other country, and even you in Nigeria, you can wake up in the middle of night and trade Forex. You understand? You can wake up in the middle of night. So Forex trading is not 24/7 anyways, but it's 24/5. That is, it means that 24 hours in 5 days, from Sunday to Friday. Now, the Sunday you are saying it's not Sunday morning, Sunday evening. All right. So it's Sunday evening. So now below here are the list of the list of international markets that we have that ensures that forex trading is going on, and then that will make the activities possible, right? So first we have Sydney, that is from 5 p.m. to 1 a.m. EST. Hong Kong, 9 p.m. to 5 a.m. London, 3 a.m. to 11 a.m. Tokyo, 7 p.m. to 3 a.m. Singapore, 9 p.m. to 5 a.m. and New York City, 8 a.m. to 5 p.m. Okay, this is just a note, like Eastern Standard Time, EST, is 6 hours behind Nigeria time. So for you to get like the exact time, just like reduce 6 hours from each of the times. Add 6 hours to each of the times so you know what time we're talking about here. All right, so buy versus sell. So we're already getting close to the interesting part of this course. So buy versus sell. Let me extend my. Buy versus sell. Now, forex trading is the buying of one currency while simultaneously selling another currency, like I mentioned earlier. These currencies expressed in pairs, right, are always connected to each other, as the value of one currency cannot change unless it compared to another. Trading Trading in this marketplace is unique because there are equal opportunities to buy or sell these currency pairs. If you buy a currency pair expecting it to increase in value, you are going long. Now, if you sell a currency pair expecting it to decrease in value, you are shorting, right? Whether you are going long or shorting in the market, one currency is always going stronger against the other. And one currency is always growing weaker, creating an opportunity for any other trader, any type of trader. All right, so now let me add a little explanation to this. Now, like I mentioned earlier, so in forex trading, when you buy a currency, like a country's currency, you simultaneously sell another. All right, you simultaneously sell another. That is because it is very, very difficult to actually know the value of a currency except you compare it with another currency. For instance, now you usually hear something say that like $1, like as I'm speaking now, I think a dollar is about 1,400 naira. All right, so now we are using dollar versus naira. Understood? We are using dollar versus naira to know the value of dollar in our country. So, and that is how it is being done in every other countries, right? So, and not only dollars, you can also check the with forex trading, like knowing the value of like Great Britain pounds, like pound sterling versus naira. I don't know the current price now, but let's say something around maybe 2,000, for instance. Maybe one pound is equals to 2,000 naira. All right. So now, you see, one thing in forex trading is that you should. One thing, this is very important. I want you to take note of it. Trading forex. Before you sell, you don't need to buy first. You understand? I'm talking about this buying versus sell. Before you buy, you don't need to sell first. Sorry, before you sell, you don't need to buy first. Unlike the first illustration I made about you traveling to the US and going to Bureau de Change and all of that, it means that you already have some naira with you to go and exchange with dollar or this thing. So, but it is not as difficult like the way it was illustrated. All right, so the way it was illustrated. Now, so if you buy a currency pair, increasing in value, expecting it to increase in value, you are going long. You understand? You are going long. That is, if you buy dollar now and you are expecting it to increase in value, you are going long. Now, if you sell dollar expecting it to decrease in value, you are shorting. And then the shorting is not that you are making loss, you are still making profit. You understand? This thing is just buying and selling because now, even in the commercial markets generally, you always want to buy at a low price so that you can sell at a high price, right? Now, so when you buy dollar, so it means that when you buy dollar when it was low, and then you sell it back when it is high. Or if you are having some dollar with you, and then you just make some analysis, and then you are able to know that it will be falling, the value will be depreciating, right? So you sell them out. You sell it out so that you sell it high, so that by the time the value decreases, you would not make losses with you. You understand? And then when the value now reduces, you can actually buy some more dollars or buy a new dollar, right? Expecting it to go high again. You understand? So It is as simple as that. Forex trading is as simple as that. Now, I know someone is already trying to ask that, does it mean that I will have to be going to be buying dollar and be keeping on this? That's not like that. It's not like that, all right? So this is just to introduce you to Forex trading, and you just understand how it works generally. All right. So, and then you, another thing you should notice here, we see that that these currencies are expressed in pairs, right? In pairs. That is, in Forex trading, you cannot just trade only one currency. It's not possible, right? It's not possible. So, it's not possible. You can only trade like two currencies or two, like at the same time. That's why I say that it is like when you buy a currency, you simultaneously sell another. All right. So let's check what we have next here. Oh, sorry for that. So let's check what next we have here. Now, so currency pairs. You see now gradually we are getting close to the end of the course. All right, so currency pairs. Currency pairs are just that individual currencies that are paired up. Example include EUR USD, which means euro against the dollar. USD / JPY, which is US dollar against the Japanese yen. And GBP versus CHF, which is British pound against the Swiss francs. All right, so now this is the example of it here. So this is it, Euro USD. All right, so the first currency are the base currencies. So the other currencies at the right side are the quote currencies, right? So now, okay, let me quickly just chip in this. Now, the currencies by the left side, at the left side, are the ones that are more valuable than the one at the right side, like by the right side. Okay, so for instance, euro is more valuable than like US dollar. US dollar is more valuable than Japanese yen. Great Britain pound is more valuable than Swiss francs. All right, so that is it. For instance, okay, so these currencies are paired together. All right, so these currencies are paired together. Okay, so let me just make some other explanation here. All right, so now it means that, let me use my whiteboard for us to understand this very well. So my whiteboard. All right, now come to my whiteboard. So we have euro. Don't mind me. We have euro versus USD. All right, we have euro versus USD. Okay, I think let me just use text inside this one. I don't like the way it's, because I still need this space for a lot of things. All right, let me erase this off. All right, okay, let me use my text too. So we are looking at euro. Okay, visually like this, euro / USD. Okay, done. Where is it? Okay. Oh, sorry. I have to do this thing again. All right, so euro versus USD. Now this is a currency pair. So this particular currency pair, if you now, as a forex trader, if you decide to buy this currency pair, what it means is that you are buying euro. You are using dollar to buy euro. You understand? You are using dollar to buy euro. So, and in the trading charts, sorry, I don't know if this text will be cleared, but let me just do it like this. Sorry, I think I'll just write this thing here like this. Okay. Euro USD. So if you buy this currency, now if you click on buy as a forex trader, so what it means is that you are using dollar to buy euro in this case. Okay, you are using dollar to buy euro, and then you are expecting, now in your trading chart, we'll still be going to trading chart, but before we get there, so let me just explain this. So in your trading chart, you are expecting the euro USD chart to be going up like this. So that is what it means. Okay, so it means that you predicted, or you are based on your analysis, you've come to the agreement that euro will be increasing in value while dollar will be decreasing in value, and that's why you are using dollar to buy euro. You understand? From the explanation, you are using like the currency that you have spot, or that you have realized that will be depreciating, or that will be decreasing in value. You are selling it out so that you could actually purchase or obtain a currency that will be increasing in value. All right. So now, and if you spot that USD will be gaining more value, will be increasing in value compared to euro. So it means that you want to be seen, you predicted that the chart will be coming down like this. All right? So it is as simple as that. It is as simple as that. Don't mind this, my trading chart here. This is not the proper way. This is not how it's supposed to look like. This is not how it looks like actually. But at least just for you to, have the understanding and all of that. So let me go back. All right. So the same thing with other currencies. We have GBP versus USD. We have, USD versus Japanese yen, JPY. You understand? So the it is still the same thing. All right. In this case, this GBP USD, it means that when you buy on the chart, it means that you are spotted that Great Britain pound sterling will be increasing in value, while United States dollar will be decreasing in value. And in this case too, this one, it means that you predicted that US dollar will be increasing in value, while Japanese yen will be, reducing in value. Sorry, US dollar will be increasing in value, and Japanese yen will be reducing in value. I don't know if I say it rightly in the first place. All right. Now, and if you sell, if you are it means that, so in this case now, it means that you are expecting to see the chart going up. Let me use this. Okay, let me go back to my black. To be going up. You understand? Now, if you're expecting the chart to be coming down, it means that you are selling. So in this case now, you are buying. In this case, it means you are selling. All right. It means you are selling. Now, when you are selling, it means that US dollar in this case, it means that US dollar will be increasing in value, while Great Britain pound sterling will be reducing in value. And in this case, if you sell, it means that Japanese yen will be increasing in value, while United States dollar will be reducing in value. You understand? I don't know if we get what I'm talking about. So it is as simple as that. Don't worry, if you don't understand this thing, you can backward it. It's not a live video. You can backward it and understand it very well before you move ahead. Okay, so let me go back to our course material. All right, so this is how we have it there. Yeah. All right, so now let's move ahead. Now, what is pips? What is pips? So pip, that is a percentage in point, is a unit of change in an exchange rate of a currency pair. Do you get that? In a currency pair. So the major currencies are traditionally priced to 4 decimal places, and a pip is 1 unit of the 4th decimal place. You get that? So now, to understand this better, we'll be using Euro USD. So now, firstly, what this price mean is that, let me use my brush tool here. So firstly, what this thing means is that for you to buy one, okay, for this purpose, let me take my camera back up here. I don't know, sorry. Okay, sorry for that. Let me bring my camera up here so we'll understand that very, very clearly. All right. Now, so these pips now, it means that now this particular figure you are seeing here, what it means is that 1 euro, which place can I even use? Okay, let me just zoom this place. Sorry for that. That's not what I wanted. All right, okay, let me just zoom it out like this. So this is what it means. So I will zoom in again because I still want to be seeing the price here. Yeah, so what this means is it means that 1 euro, why is this doing like this? Okay, so it means that 1 euro is equals to sorry, it is well. It is that 1 euro is equals to, let me use another color here, is equals to, all right, is equals to 1.2001 of my eraser tool is equals to 1.2001. Okay, 1.2001 $5. Okay, we understand that's dollars. Okay, let me put the dollars here. You understand? Now, because the currency pair is actually euro versus dollar. So 1 euro is the price. Now, so for you to sorry, it's like I'm getting something. No, sorry, that's not what it means. So it means that I think it means that $1, made a mistake there. It means that $1 is equals to 1.2 euro, because euro is more valuable than dollar, and that's why we have it in the front. I'll come back to my yellow pen. So to euro, something like this. All right, is this euro sign or pound sterling sign? I don't know. All right, so this is what it means. Okay. So now the pip actually, it is the pip actually. So let me make my camera to this place. So the pip is 1 unit of this price of the a 4th decimal place price. All right. So, and the 5th decimal place unit figure is pip height. It's called pip height. That's 0.5 pip. 0.5 pip. That is 0.5 pip. So that is pip. So you just have the understanding of pip and lots. So let's finally move to lot size. Lot. So a standard lot in the Forex is equals to 100 currency units, 100,000 currency units. It is the standard unit size for traders, whether they are independent or institutional. Example, if Euro USD exchange rate was $1.3, one standard lot of the base currency euro would be 130,000 units. All right, 130,000 units. So now you see a lot size. I like using this illustration very well too. To understand this lot size very well, let's say we have like a team of 5 traders like that sells rice, and then you want to go to like a market. I don't know, just picture any market close around you. So you want to go to a market, and then the 4 of you, okay, like a team of 5 traders, the 5 of you like want to buy a bag of rice, right? So let's say a bag of rice is 50,000 naira, and then each of you is like requested to contribute like 10,000 naira each, right? So, but one of you guys now say that, oh, me, I don't have up to 10,000 naira. And now there's 2 ways to solve that. The first way is either to look for a 6th person that will come and carry the burden of the 8,000 naira that the person is not able to pay, or one of the remaining 4 persons is willing to carry the burden. For instance, now let's assume that one of them, one of the 5 traders agree that, okay, all right, me, I'm going to pay 18,000 naira, you pay 2,000 naira, and every other person pay like 10,000 naira as originally agreed. So now so the portion that you are buying is the lot size. All right, the portion that you are buying is the lot size. So, and okay, let's not say you just gave your 2,000 naira and then you guys went to the market and brought 1 bag of rice and you share it. Now your own share would be like directly proportional to the amount contributed. You contribute, yeah, that your 2,000 naira, yes. And if you make a profit, it will be in proportion of that your amount of that 2,000 naira capital. And if you incur loss, it will still be like in proportion of that your 2,000 naira. You understand? So that is lot size. All right. So in Forex trading too, there is lot size. So the lot size, it is like the portion of the market you want to buy. Now, so this explanation is just giving us that a single lot, a standard lot, for those of you that you've been trading Forex already, and if you have like $100 accounts, you know that you dare not try to trade Forex trading, trade Forex with one lot size. Your account will bleed. Your account will bleed, and then your account will bleed. All right. So this reminded me something. I will not just talk. All right, it's fine. I have some friends traders that mistakenly increase their lot size, and then maybe the market you will not understand this lot size. You will understand it very well when we maybe in our last class or tomorrow's class or something. You will understand it better. All right, but just have this little understanding about lot size. So that is it. So now there is a mini lot size. So a mini lot size is 10,000 units. All right, and the last is micro lot size. So the macro lot size is 1,000 units. So see, what this thing means actually is that you're not supposed to even trade like the least lot size, which is a micro lot size. You understand? Because it is still 1,000 units. For instance now, if you want to trade Euro USD, for instance, it means that you must have like 1,000 units of your base currency. That is 1,000 units of euro, and 1,000 units of euro now, it is above 1 million naira. You understand? That is still for the least lot size. But there's something that we call leverage in forex trading. Like, you will not understand it now. When we get to the class, though, maybe like tomorrow's class, you will understand it very well when we are dealing with terminologies and tools that are like up there that have been made available. All right. So now that is just it, and I think with this we've come to the end of today's class. I've come to the end of today's class. I know very well that if not because of the long explanation and all of that, you should have be done with the class since, because it is a very, very simple something. And so please, if you don't understand this thing very well, just go back to it. So let's just check again and see what we have covered. We've talked about forex trading. What is forex trading? We explained forex trading. That is selling of one currency and buying another with the goal of making profit. We also talk why forex trading. Why do you want to trade forex? Why is it secure? Is your money safe? Is this, and it's that? Yes, you see now that it is the largest financial market in the world, with an estimated amount of $7.5 trillion being transacted daily. All right. So we check trading sessions in about six countries: Sydney, Hong Kong, London, Tokyo, Singapore, and New York City. We talk about buy and selling. All right. It means that when you buy a particular currency, you are selling another. When you are selling in another now, this actually means that when you are buying your base currency, remember the base currency is the first currency. In the case of Euro USD, in the case of Euro USD, this one here at this side are the base currencies, right? These are the base currencies. Let me clear that. So these are the base currencies, and the one at the left side are the quote currencies. So it means that. So now it means that when you buy euro, it means that you are selling dollar, and then you are expecting on your trading chart, you are expecting the chart to be going up. So that is very, very simple. All right, so we've come to the end of today's class. All right, thank you. We have come to the end of today's class. See you tomorrow. Now, up next, tomorrow, by the grace of God, I would like us to treat FX102 and FX103, but I'm already saying it that we will not be able to cover FX103 completely tomorrow, so we just touch maybe half of it or some part of it. All right. So please, if you don't understand this anything, sometimes you might need to watch the video over and over again. But trust me, it is very, very simple, and I know there are some of us that we understand things very, very easily. So I know that we've already understand that, and if you are still finding having some challenges in understanding, please feel free to watch it over and over again. Just over and over again, and that's why I recommend that you should have a writing material, have a pen, have a book, write things down. All right, so by the grace of God Almighty, tomorrow we'll be looking at FX102 and FX103. All right, so thank you very much for your time and staying to the end of today's class. If you are able to stay to the end of today's class, I think that's a very good one, and also you have actually show a good interest in this. I also encourage you to, put the same energy tomorrow. Put on the same energy tomorrow, and make sure that you are not distracted. All right. So I don't know if this class is interesting. I don't know if you enjoy the class, but I bet you don't want to miss the next classes, because like these are the classes that you need to, you need to become a profitable trader. You need to, to be able to practice trading. All right. So we'll be showing, we'll be talking about some terminologies, tools that is used in trading. All right. So we'll be, talking of things that you need to, get started in Forex trading. All right. So thank you very much. Once again, my name is Yisra'el. See you tomorrow. Bye.